Fine, now I've got it back. Sorry, one of the volume things turned down. There we go. We're on the YM and NQ and ES. Got the three of them here. Again, this is what we're seeing all the time at the moment. We are seeing divergence between the three, which is we get up days. We've had strong up days here on the NQ. We've had down days here on the equivalent YM, and we've had a sort of dolly mixture effect over here of up and down days as well. There is very little consistency at the moment. There's an awful lot of divergence going on where we get 2 up, 1 down, or 2 down and 1 up, or 1 up and 2 down, so on and so forth. There's so many different variations at the moment. What we've had on the YM, we had moving down in the morning, we've had a recovery. Similar sort of thing on the NQ, but that's trying to push higher. The ES is pretty similar to the YM. So it's a real mixture at the moment, and under normal circumstances, these are not normal trading conditions. Under normal conditions, you would expect these three to be working in lockstep pretty much. Certainly not to get the swings in up and down days. The advantage of it is that once you get two moving in one direction and the third maybe is not, it does give you a fairly strong clue that that one may well follow suit in due course. The NQ has been driven primarily, obviously, by tech and all the rest of it, whereas the other two have not been driven so much by that particular factor. And that's part of the reason for the divergence that we've seen. What we're seeing right now on the 5-minute at the top there, we're starting to see the trend monitor transition, come out of the bullish phase into a darker red, so potentially moving into a bearish phase. Here we've had the two of the four conditional changes. We've gone into dark blue. Now we're moving into dark red in terms of a move lower. Nothing yet on the 5-minute on the YM. So certainly there's a bearish tone taking place across the complex, if you can call it that, or certainly risk asset classes, if you like. In terms of these charts themselves, and where the volume point of control is, obviously on the ES, we are literally very close to it. So in terms of where that trade is like to go, if we were going to take a short position on that particular trade, there isn't a great deal of distance between where we are now and where we're coming down to. So in terms of the extent of any reversal, it's pretty limited, because we can almost certainly expect to see congestion here, purely because we've got so much volume sitting in this region. It's the maximum point of volume on the VPOC. It's where the volume point of control sits. It always does. And that is basically the fulcrum of the market. We move through this low volume node here pretty quickly. And it's an aspect of VPA, of the VPOC, which basically brings volume into the volume price time relationship. When we're looking at volume down here, let's get rid of that. When we're looking volume down here, we're looking at the linear relationship, if you like, between volume and price. When we're looking at the VPOC up here, what we've basically done is swing it up onto the y-axis, if you like, and bring in the concept of time. So it's volume, price, and time. So the longer that a market congests at a region, then the greater is the volume that then sits there. And the importance of that is it then acts as either support or resistance. If the market's got to break through this huge wedge of volume, then it's going to take real effort to get through there. The volume down here is lower, so it will take less effort. Where you get these lower volume nodes, it takes less effort, and that is the key point in terms of volume from the y-axis perspective of volume, price, and time on the volume point of control. So that's what we're starting to see at the moment. We're starting to see this bearish tone come into effect. We haven't got far to go on there, but if you're going to take a short, you've got more opportunity in terms of the NQ, but then bear in mind that the NQ is the more bullish, and has been for the last few weeks, if not a couple of months, of the indices. So it's just a case of being a little bit more cautious than you normally would, because this has shown no sign at the moment of a desire to fall big time, other than when we've had intraday reactions for various commentary and news events. So you've just got to be considered. And when you're looking at the trading opportunity, if this were just a straightforward trading opportunity, you're looking at the downside, what's the opportunity? Well, you've got 35 points here, which is fine before you like to hit this, but you have got a ton of volume at this level here. So in terms of clear water, if you like, we've got half decent volume here. which is not as heavy as obviously at the volume point of control. We've got a low volume node here, but we've got very little in the way of price-based support coming into play. These are minor levels. This has only been tested once. This has only been tested once. We've got another one here that's been tested once, and finally one up here. So on the accumulation distribution indicator, we've got very little in the way of price-based support to worry about in any down move, unlike these guys here, which are very strong because they've been tested. Yeah. Can you hear me? Okay. Other than these guys here, which have been tested multiple times, and hence they're thicker, as indeed is this one. So from a trading perspective, very little to worry about in terms of price support coming into effect, in other words, causing a pause point. More worrying is the amount of volume we've got sat here. So we want to see a decent pickup in volume if this move is actually going to develop into a decent move to the downside, other than just a drift, which is a bit painful. So that's where we are in terms of the three of them as an overall perspective. Sorry, just highlight the daily. We've done the dailies. Yep, they're just coming off. I mean, if we go up onto the YM, you know, this was a key day. Lots of volume coming in. Effort to rally. Big wick to the upper body. You know, that's the first sign. It's not the signal to sell short and pile in and all the rest of it. It's just giving us a signal that we've got high volume. We've got a market that's trying to rally. There's lots of selling going on in here. The market's not going to close up. It's going to close down. And, you know, there's a ton of selling going on in there. And it's starting to look weak. It's not a sign that this is just suddenly going to do that. It's just a sign that we are more than likely to move into congestion. What we're looking for now, if we get more of these, if you get more days where you've got up thrust and it's weakness, it's trying to rally and it's falling back, trying to rally, falling back, or you get dojis, you know, dojis are indecision. They're not signs of reversal, but they're certainly signs of congestion. They're not signs of strength. They're just signs of indecision. But when you get more confirmation signals like that, you know, that is what you're looking for in terms of, I'm talking about major reversals. But in terms of principle, it's exactly the same whether it's a 1 minute chart or a 1 month chart. Volume price analysis applies in exactly the same way. Let's just go on to the, where are we? There we go. Okay, I've got the NQ here. This is on multiple time frames. So this is just the NQ we're looking at now. I've got the 15-second, the 1 minute, the 3 minute, the 5 minute, the 10 minute, and the 15 minute bottom right. So it's just a question of seeing where we are. This is a very fast chart. I like to have this one 15-second, 30 seconds a little bit too slow. I prefer the 15-second. Then up to the minute. See what's going on in the minute. Okay, we're in sideways, chopping around. In terms of a trade to the downside, you know, if we drop out the bottom here, you know, lots of clear water, nice, breaking away from that whole region. Then we go up into the 3 minute, see what we've got there. So if we're on the 3 minute, you know, move to the downside, fine, get through this low volume node, you know, comes down back onto the volume point of control here. So there's plenty of clear space there for that one. Let's have a look at the 5 minute. Similar sort of picture, volume point of control down here, low volume node. Looked at that earlier on. Let's have a look at the 10 minute. There we go. Okay. Little bit of weakness coming in there, you know, wick to the upper body, wick to the upper body. It's what you're looking for all the time, wick to the upper body, possibly another wick to the upper body here. You know, it's just profit taking. I mean, we had a decent rally, a very strong rally here. You know, this is profit taking. Just interesting to see how the volume shapes up. But in terms of a move, you know, we've got a decent amount here. We've got no price support that's likely to come into play. We've got a low volume node here. Where are we? 85, something like that. So it's pretty thin, but you know, good enough. Take anything. And then we're coming down to 370. So in terms of a move, probably going to be a 20-point move down to here, and then we'll see congestion build. But as you can see, very light in terms of any price-based support. Only the heavier stuff is much down at this, much deeper at this level, which is not going to come into play. We're just looking at this opportunity at the moment. Which is, yeah. Okay. Sorry, Anna's just reporting something back to me. Apologies.
And that explains that volume may also be added, and so that's why it's sort of going up, which is why I'm saying they.
Okay. A little bit of buying coming in here, a little bit of support, and you can see it there. Wick to the lower body. Nice chunk of volume coming in. Expect a little rally off that. You can see it here coming in on 15 seconds. Volume's falling away on the uptrend. See what the next one's like. Not particularly good. Doesn't look that strong. I want to see a bit more volume for it to drive up, but it's going to hit the VPOC anyway. So in terms of that rally, it's not, it's unlikely to travel far before it hits congestion anyway. And that, if you overlay that, if that was on a 30-second chart, you'd have a little upthrust there. So you've got an up and a down. Very easy to do on 2-bar reversals, just to see that reflected. Let's have a look on the 3-minute. There we go. It's a real drift. I mean, this is, yes, it's got, obviously the trend monitor's transitioned through to red now. We've gone through the traditional, not the traditional, the typical traffic light change. We've gone from bright blue of bullish into darker blue. The sentiment towards bullish is weakening. The sentiment towards bearish is strengthening, and then we're out the other side into the bearish sentiment in bright red. So that is a typical transitional change. Doesn't always do that. Sometimes it'll miss one of those changes. Sometimes it goes from bright red to a bright blue to bright red, and vice versa, depending on the strength of change in trend. But the key point is the trend monitor. When we're using it with the trend dots, it works brilliantly on Renko charts. I'll hop over there in a minute. It takes a more considered view of the trend, and what it's been developed for solely is to help to keep you in trades once you are in, because that's when you get bounced out, and it's so easy to get bounced out of them. Just see what's going on. For the VIX, yeah. Okay, I'll just bring the VIX over because I've got it here. This is on 2-minute, and what you can see here is largely the VIX has been falling, punctuated with 1 or 2 rallies, but essentially it has been falling. As a consequence, we've seen indices rising. Now we are starting to see this pick up in the VIX. In other words, the VIX is rising, and therefore, as a consequence, we expect equities to fall, which is why the indices have come off a little bit. This is a direct correlation. It's an inverse correlation with equities. So if the VIX is rising, then equities are falling. And if the VIX is falling, equities are rising. It's called the fear index. It's as simple as that. But if you're trading anything intraday, and I don't care whether it's spot forex, currency futures, indices, bonds, commodities, stocks, doesn't matter. You should have this up somewhere, because it tells you instantly about the intermarket or intraday gauge of risk sentiment, whether it's risk on or risk off, because it's based on the balance of puts and calls in the options market. So, go and find yourself a VIX index somewhere. I've actually got one. You can find it on investing.com. Theirs runs live, or if you've got TradingView, you'll have it here. If you've got a pro account, I'm not sure whether it's in the free account, but certainly if you've got a pro account, you'll have the VIX there. So that's what the VIX does. It's an index that every single trader who's trading anything should have up on the chart, in my humble opinion. Most don't bother, which, well, it's a free world, I guess. But there we are. I was going to say something else, but I won't. I won't get on my orange box. I've put my orange box away. Okay, here we are. We're getting this little rally, this little reversal. We saw it here. I said there's some buying coming in. There it was. It's a Telegraph poll. You can't miss them. You either see the Telegraph polls or you see the little tiny ones, and you go and hunt out these little ones. And, they tell you whether You know, if you've got a little bit of, if you've got a rally and it's on very low volume, it's not going to go very far. If you're seeing anomalies, you know, this candle's anomalous. Why is it anomalous? Because if price and volume are in agreement, then the close shouldn't have been up here. It should have been down here, possibly even deeper. Because when you look at comparative candles, you might go and look at this one, for example. This one actually triggered volatility, but you can see the width of that candle and the associated volume, and this volume is actually higher. So why isn't this price candle A, deeper, and B, not closing with this big wick? So clearly there's buying coming in. And if you're a scalping trader and you wanted to scalp that, you know, there's 6 points here and 6 points on the NQ, or possibly even more. You know, that's worth having. That most traders on scalping NQ would be quite happy with that. Certainly be happy with it on ES, for the sake of understanding volume price analysis. Now we're coming up to some more significant price-based resistance here. You can see this one here on the accumulation distribution, which has got a little 4 on it. Maybe you can't see that, but it's got 4, I can assure you. And what that means is that this level has been tested at some point in the past 4 times and held. It's now coming up to test it again. So it's now acting as resistance if we break through that. So it's not a hugely strong area of resistance, but nevertheless it's an area of resistance which we need to be aware of at 406. And if we break through there, it then becomes a platform of support. You've also got another one here just above it, which has been tested twice, which is hidden underneath the VPOC. So the two of those acting as a little cluster is quite a strong area. And of course, in addition to that, what we're trying to do now is we are trying to battle through this increasing volume up towards this point. So there's lots and lots of resistance in terms of volume, but very little in terms of price. So the next key one is we're now coming up to test it. We've got 2 points to go. We may test it while we're sat here, see if it does. Okay, it's testing it now. Let's see if it holds above or it's going to cap it. You got to remember these levels are absolute pinpoint accuracy. We're not talking about, you know, large swathes of price action. You've seen them on other people's charts with great big lumps of, you know, this area is resistance, and you know this area up here is whatever. These are to the point. These are to the index point. These levels, they are absolute pinpoint accuracy. I'm just testing that 2 there as well. See if we break through or not. It's having a bit of a struggle, and we had a bit of a struggle here before anyway. In fact, we've had several struggles. But of course, if you get through there, we do get through there. Okay, the volume point of control has now dropped. So it's actually dropped even closer because this volume is now building over here. So this volume exceeded the volume that was up here. So we're now at a different point of control. And this is a key thing about the volume point of control itself. It's not a static thing. It doesn't stay in one place forever. It's not like some deep sea anchor that stays in the same location. It moves constantly because the chart itself is moving. It's constantly rebuilding these regions, building volume. I mean, you can see the sort of volume, you know, constantly rebuilding around these regions of where price is acting. And therefore, at some point, you know, the volume point of control will move, and that applies to a daily chart where you'll see it there. It will sit for some period, and then in some point in the future, the market will move into congestion. Volume will exceed historic volume of the old VPOC, and the VPOC will jump to the new level. Okay, we've got weakness coming in now. Wick to the upper body, decent volume under that candle. You know, it's not looking terribly strong. Looks as though it's going to have another failure like these two. Might be time to short that if you're intraday trading it. That's on the 1 minute. Let's just go back and see, have a look at the others. So for 15 seconds, there we go. You know, nice signal there, lots of volume, nice big effort to rally, falling back. But how far is it going? That's the question you've got to ask yourself. And it's going back to here because that's where the volume point of control is. So it's not going very far. So if you're going to trade that, you've got to be in and out pretty darn quick. You know, it's 07 to 04, 05. Okay, in, out, take a couple of points, get out. Not going any further than that. That's the reason why. So there's always little scalping opportunities, even when the markets are a little bit sluggish like this. I mean, we get fantastic roaring days when you know, anyone could make money really. You don't have to be particularly skilled. When the market's moving fast with momentum, then you should be able to make money pretty easily. It's harder to make money days like this, where you have got to be skilled, and you've just got to have your indicators, understand VPA, and you know, be quick on the draw, get in, get out. And if that style doesn't suit you, and let's face it, it doesn't suit everybody, some people run a mile from doing that, and it's understandable, in which case you have to sit on the sidelines and wait for those days when the markets are fast moving. So, you know, these two candles really stand out. You've got, you know, some selling coming in here, down we go, and then you get buying coming in on this one, so up we go again. You know, and also when you look at this candle here, this little chap, look at the volume under it. You know, is that selling pressure? No, because you've had, you know, 3 down candles here on decent volume, and then you get this little one with hardly any volume. So is that selling pressure? No, it's not. So you're expecting it to move to the upside. Now we're starting to move away. We're moving up into lower volume. Let's move up to a slower time frame just to get a different perspective up onto 1 minute. There we go. Now we're going to come up and test this level here, this level here, which is quite significant. It's already had a run at it. It's going to try and have another run at it. Just keep an eye on that 15-second one there. Go down to 5, a different perspective. Okay. And we've had that drift, a little bit of buying coming in under there, which is reflected over on the faster time frames, trying to rally. Very lightweight resistance overhead here. If we can get back up to, you know, this region, it might well carry on higher. Just keep an eye, just pull over the VIX here. The reason we're seeing that bounce is because this has rallied but is now starting to reverse. If this continues to reverse lower, this is on 2 minute. If that continues to reverse lower, then we will see the equity markets rise. Let's pop that back over there. I'll just keep an eye on that. Okay, it's just dropped another point. It's down at 23.2. I want to see it get back to 23, in which case this rally will continue. You can see the trend monitors transition here into blue, transitioned into blue on 1. Nothing on 3 at the moment. You wouldn't expect it. We've got a bit of chop here on 5. And the longer term 10-minute is still staying resolutely blue. And really that just highlights the whole issue of, you know, what am I trying to do? Because as an intraday trader, taking a longer term perspective on this rally, you might well just be considering this as a minor reversal in the longer term bullish trend, which for you as a 10-minute trader, 15-minute trader, 30-minute trader, that may well be the case. So all the intraday trading is going on down here. The scalpers are in and out all the way through here. But you as a longer term trader don't really care about this because your perspective is completely different. And you know, it's a facet of trading that you have to come to terms with. What am I trying to do? Am I trying to scalp this? Am I trading it longer term? Am I staying in here for hours, or am I staying in here for seconds or minutes? You know, what am I trying to do on this particular trade? And the problem comes when you go in on one philosophy or one tactic, if you like, and that tactic doesn't quite play out the way you expect it to play out, and then you roll it over into a different one. So you'll go in as a scalper, doesn't quite play out, so you think, okay, well, I'll roll that trade over and now I'll take a 15 or 30-minute view on it. Everybody does it. We've all done it. I've done it. Anna's done it. You know, it's part and parcel of learning. It's part and parcel of our psyche, our makeup, our DNA, if you like. It's just the way we are. And you just have to try and control that and be disciplined in what it is you're trying to do every time you go into a trade. Doesn't mean you can't do everything. If you are using multiple tactics, then if possible, it does make it a little bit easier if you can break them up into different accounts. So if you're going to have an out-and-out scalping account, have an out-and-out scalping account. If you're going to have a longer term, swing or trend trading account, have a longer term swing. Try to differentiate them if you can. If you split your capital that way, it's not a bad way of doing it. It's a nice move developing now. Breaking away from the VPOC on 1. Trend monitors transitioned. Are you okay on the questions, by the way? Okay. Starting to see it. That's what the transition is starting to come through quite strongly now. So where the buying came in down here. Nice candle there. A little bit of weakness on that one. Let's see where we're going on 1. Okay, not too bad. Lightweight there. The volume here really falls away once we get up to this sort of level, but we've got to battle our way up to 20 odd. It's quite a long way. And it all started on 1 candle, which in a way is quite scary and in a way is very reassuring, and it just demonstrates the power of using volume in whatever you're doing, whatever instruments you're trading, whether you're trading stocks, you're investing in stocks, whether you're trading ETFs, whether you're trading spot forex, whether you're trading currency futures, it doesn't matter. What's at the top of the chart really makes no difference whatsoever, other than the pure numerical value, the notional value that each smallest price move is associated with it. And as long as you understand that, the rest of it is almost academic. As long as you understand when the market's open and closed, whether it's risk, how it's associated with risk assets and everything else. But actually the price chart with the volume could be anything. It really doesn't make any difference whatsoever to understanding and reading the chart. And really what we're looking for now is to get through this level here. If we get through 20, we get another 6 or 7 points up, maybe get through 2021, then that should continue on for a little bit longer. So that was just a minor reversal really. It didn't look particularly strong, the reversal. It was just sort of drifting lower. It wasn't collapsing out of sight. It wasn't a heavy sell-off. It was just a drift. And again, you look at these little pinpricks of volume here. You look at it there. Down candle, tiny amount of volume. So, good for another couple of points maybe. Okay, we're hitting some decent resistance up here. You can see it on the accumulation distribution indicator. This has now been tested 3 times. It's significant, but equally below we've got a half decent level of support. This has been tested twice, so that's it's not hugely strong. It'd be lovely to have sort of a 5 or 6 up there, but at least you've got something. So I'm in this little corridor here of support and resistance. We want to see this resistance taken out. If the resistance at 416 is taken out, then we should be good to go on up to 418 and beyond, because then the volume starts to fall away dramatically and you've got very little in the way of price-based resistance to come into play either. The VIX is just flatlining at 23.1 at the moment. It's not. It's certainly not falling strongly, that's for sure.
Sorry, Dan, could you tell me what Wesley was saying? Because I'm probably late.
Yeah. Sorry, I always have my chat box closed.
It says Forex Scalper. Can I get a quick explanation to this chart?
get a quick explanation to this chart. Yeah.
Actually, what I didn't talk about, structure.
Sorry, you're talking. Sorry, Wesley, you're talking about the chart I'm on at the moment.
Or do you want to bring up a forex chart?
I can bring up a forex chart. I mean, it's all one and the same. It's. I mean, I can talk at this chart, which is pretty much what I do all the time. Okay, I'll talk at this chart. As I said, I don't know whether you missed it or not. Maybe you did. But what I was saying was basically volume price analysis applies to anything. And what's up here at the top left, the instrument is almost academic. It doesn't really matter as long as you understand what that instrument is, what the minimum tick or pip or index value is, and what obviously the contract size and what market it's in and its risk profile and all the rest of it. But from a VPA perspective, it's academic because VPA applies universally. So what we're seeing, and of course with the indicators, what we're seeing right now, we've got resistance overhead. We've got this little platform of support here, which has come into play. Stronger resistance here. That's now looks as though it could be taken out with this particular candle. Volume under that last candle was okay, but we've got to get through here. If we get through there, we've got a little low volume node here, which is pretty narrow. It's only a point maybe, so it's not that significant. What is significant is the drop off in volume as we get away up into 20 and 24 area. So once we get up into the sort of 20s, then you've got to worry about this stuff over here because this has failed significantly over here. So we're waiting for a move beyond this region because this is clearly, this is causing some problems. It's struggling at this level. That's on the 1 minute. If I go up to the 3 minute, what's concerning about the 3 minute is this falling volume. So we've got a rising market, and we've got a rising market on falling volume, which is not a good sign at all. And in addition to that, these spreads are narrowing. And when you see this sort of arcing effect of price action, what you want to see in an uptrend is obviously widening spreads. Just kind of looking around, here we go. I mean, sort of on this sort of price action, you really want to see, I mean, this is an ideal case, but really what you want to see is you want to see rising spreads. As you're going up, you want to see widening spreads. Equally, in a price waterfall, the ideal price waterfall is one where you see widening spreads. You get smaller ones at the top, and then as it starts to crash, so the shape of the waterfall is literally that. It's a waterfall to the downside like that. And equally, in an up move, what you want to see is this sort of shape. Once you start to sort of see this attenuation going on, it's almost like an arch bridge. Then that you can see it. The spreads are very narrow. What you want to see is you want to see initial spread, then maybe a wider spread, then a wider spread still. On up you go. There's nothing perfect in this world. You can't. None of them are ever going to be textbook examples. But the key thing is, in a rising market, you want to see rising volume, and we've got falling volume. And equally, the opposite is true. In a falling market, you want to see rising volume because in a falling market, it takes effort. It takes effort to rise and it takes effort to fall. So you have to see rising volume in a falling market. Rising volume in a rising market we're all familiar with because we're familiar with the concept of gravity. But falling volume, rising volume in a falling market is perhaps not so intuitive, if you like. I'm just going to drop onto the 15-second for a moment because we're breaking through there. Okay, starting to get a bit of up. But look at the trend monitor here. We've gone into this congestion phase, quite extensive, and all we've got is this little transitional color. We didn't even go into dark red. We've come out the other side into bright blue, and that's what it's designed for. It's designed to help to keep you in. Once you're in a position and you're starting to stress when you're in this sort of area, when the market's going sideways, you're hitting resistance. Oh, all right, so I close out. Yeah, I'll take my money off the table. And now you're regretting it because the market is starting to accelerate. You've got nice volume under this candle, nice widespread up candle, very little volume on the VPOC, no price resistance to speak of. This is coming up to test a very minor level right now. So you're regretting that decision to get out. And that's what the trend monitor is designed to, that sole objective of keeping you in. And if you go down onto the 3 minute, where did the buying coming in? Well, we saw it there. It was self-evident. That's where the buying came in. Yes, you've got the same principle here. You've got the falling volume. maybe we're going to see a pickup. It doesn't mean that the rally is going to come to an end, but it's just a warning signal that what we want to see, the ideal is we want to see that. We don't want to see that. It looks like we've escaped on this occasion. We've got, a little up candle, that's okay. Volume price in agreement. See what this next candle does. Bit of weakness coming in here. We've got wick to the upper body. Got a lot of weakness coming in on 15 seconds. Get rid of those things. High volume, wick to the upper body, narrow spread candle. Okay, so we got some weakness. So expecting a bit of a pullback, which is what we're getting right now. The key is how high is this selling pressure under here? And the answer is not very high. We've got downside pressure, but the volume here is very lightweight. It's not significant enough to send this market crashing lower. So we've broken through that volume now. We've got some price building, we've got support levels building, but we're coming up to a low volume region at the top here. So break through that area and up to 22 off and away. Let's have a look at a slower time frame, down on 10. Okay, and this just gives you a different perspective. Whereas on the faster time frames, we were clearly seeing some buying coming in there. In terms of the 10-minute chart, it's a long-legged doji, which in its own right is purely indecision, nothing else. It's not indicative of a reversal. It's not significant in any other way other than it's purely signaling we've got indecision in the market. In other words, we've got buying and selling, flip-flopping around. It's a tug of war, and the center of the rope, if you will, is just sitting in the same place more or less because both teams are equally weighted. Then you start to get one team taking control and you move away. But it's not significant in any other sense. Down the right here, by the way, I've got time and sales running through, which I keep an eye on. I'm not interested in these 1s and 2s. What I'm looking for are the ones that come up highlighted as blocks, which will come up with a B alongside. I can't remember what the default is. I think it might be 40 or something I've got on here. And what you're looking for there is when these big blocks come in, you're looking for the reaction in the market, because if you get big blocks of orders coming through here on time and sales and the market doesn't respond, then it gives you a heads up as to either the market is weak or it's not going any further and all sorts of things. So it's just something that we have running. We do a lot more on time and sales once we get onto TradeStation. These are the numbers. Once you start to get into double figure numbers down here, are those the sorts of numbers that become significant, and more so once you get up into the 40s, 50s, 80s, 100s, those sorts of blocks of orders going through. Okay, where are we now? Okay, we're trading around the volume point of control on the 15-second. Up onto 3-minute. Last candle there was okay. Okay, we're rising volume, that's okay. We've got increasing price spreads. So that all looks pretty much okay at the moment. And now, of course, we want to get through this level here because we had pivot, weakness, market trying to rally. Decent volume going in on these candles, and the market didn't really go anywhere. So now we want to see it push through there. I just want to see what's happening on the other two indices. Yeah, I'm just having a look. Okay, it's starting to take off a little bit with the NQ and the ES. Has it gone through? Okay. So, that's quite encouraging because they're all now sort of moving in the same direction on the faster time frames, which is healthy. So that doesn't cause us any worry. Where are we? That one.
Not massive market breadth, but okay, it's going up.
Yeah, still going up.
27.7, that's what it's heading for now.
Let's just see what it looks like on the Renkos. Can't remember what I've got on here. I've got the NQ on here as well. Okay, that's handy. I'll just leave it on the NQ. That's fine. This is basically the Renko optimizer. This is running on the equivalent time chart below. So I've got 15-second, I've got 30-second, and I've got 1 minute. And what this is doing is actually delivering the optimal brick size for the Renko chart, because there's one issue that non-time based charts are fantastic because they reveal one thing that time charts never do, and that's momentum. When you're trading on non-time based charts, they reveal the momentum of the market, the speed of the market. Look at this buying on the New Zealand dollar, by the way, fantastic. We've also got selling on the yen, so that's also helping to lift everything. In other words, that's risk on sentiment, selling of the yen. So that's all positive when we're looking at equities rising, which is good. In terms of a non-time based chart, the issue is, what do you set it to? How do you know what to set it to? How do you know what to set it to during the session? And how do you know what to set it to for each individual market that you're trading? And the answer is, you don't know, because you just have to guess. And it's the same problem with tick charts. That's why we developed tick speedometer for tick charts. It's why we developed a Renko optimizer for Renko, because all you do is just go up here and you say, okay, I'm on 15 second. You just click on that. I'm matching it to the second chart, or the time frame chart below. Excuse me. Okay, that's now come up with 7, whereas before it was on 8. So we've had a marginal change, and what this is signaling, that's 7. What that means is 7 ticks, because it breaks it down to the smallest price change unit for that particular contract. So for the NQ, it's in ticks, the ES in ticks. On WIME, it'll be in points. On spot, it'll be in pips. On gold, it'll be gold, dollars per ounce, dollars a barrel, whatever it may be, it'll automatically convert. So we are basically running on 7 ticks here. So each of these bricks is 7 tick. Just see what this one is. This is on 30 seconds. So that was on 12 before. That's gone down to 10. Okay, so we just click on that. That comes up as tick. Now, the other thing that is telling you is that because the tick count is falling a little bit, it's telling you that it's quite sluggish. If the numbers are going up, I mean, if this was 7 and we check it again and it goes to 10, then that's telling us there's a lot of momentum in the market because the tick count is going up. We're actually going the other way, and I suspect we'll find the same over here, which is on 1 minute. So that was on 19. See what that comes up with. Okay, that's the same sort of thing there. That's dropped to 15. So yes, we've got a bullish move going, but the momentum is not as strong as it was in the market beforehand. So again, it tells you that just by simply checking what the Renko activity is, what the setting is on the Renko optimizer. And the other beauty of this, as I said earlier on, is that the trends and the trend monitor work fantastically with the Renko charts, because what the trend dots do is they signal a change in trend very close to price action. You can see it here. They roll over the top, then they roll back under the bottom again, pushing up, pushing up, pushing up. Then they go into these transitional colors. The trend monitor hasn't changed, hasn't flickered. Same here. You've got a 2-bar reversal or 2 or 3 brick reversal here, back up. Same here. On up we go. Nothing there. On up we go. So using it in this multiple way with the time charts below, you can use VPA on your time charts. And obviously you've got the beauty of momentum in the Renko chart, and also using the trend monitor and the trend dots on that particular setup. And the Renko chart smooths out the price action. It gives you these beautifully structured charts. It smooths out the noise, but you've still got all the analysis below of volume price analysis, but you've got all the advantages of trading on a non-time-based chart. And without even looking at a chart on spot, I can tell you the New Zealand is absolutely motoring higher. And without even looking at a chart, New Zealand, Swiss franc, New Zealand euro, or euro New Zealand yen be moving very nicely indeed. Cross on the New Zealand CAD. Spoilt for choice, really. Lots of opportunities, but really strong buying in New Zealand dollar right now. I'm not sure what time frame is on that. 3 minute. Okay, pretty quick. There we go. We are absolutely way out of time. Apologies. I can hear Anna clacking away in the background. I think we've probably answered all the questions. We're going to have to wrap it up there. Hope you've enjoyed today's session. Thank you so much for coming along. Sorry it's gone way over time. You can find all the indicators here at quantumtrading.com for MT45, NinjaTrader 7.8, and TradingView. Yes, TradeStation is coming. I know I've been saying that for a long time. We've got one of the things we're trying to smooth out, one or two things. But it is coming along, and we will get it launched as soon as possible. So please don't worry if you've made inquiries about it, and I know several people have. It is on its way. Thereafter, we will be dropping back onto TradingView. If you have the full TradingView package, then what we're doing is, as a thank you for investing with us with some of the indicators missing, you will actually receive those indicators as a free upgrade, because we think it's the fairest way of doing things. So we're dropping back onto that, and we hope that we can do all the indicators, because we now have the flexibility in the upgrade on PineScript to do that, so we can pull over all the other indicators, because we have object and line drawing, which is fantastic. So we're hoping we can get all the Forex indicators over there, and all the others that are missing as well. You can follow Anna, annacooling.com. All the books are there, Kindle and in paperback as well, and all the analysis on her site too, and you can find her on Facebook. This is the Forex program, the complete Forex trading program, because that's what it is basically. All the indicators, you get the complete full set of indicators, whether you're on MT45 or NinjaTrader, TradeStation package will be there as well, of course. Those are the core modules: psychology, fundamental, relational, technical, and the mechanics of trading. They're just incredibly deep dive into all those aspects of trading. There's over 200 hours of video in here. You've got the webinar library, topic webinars, pulling it all together, how to use the indicators in VPA. There's a wealth of VPA chart examples in there, and of course membership of the VPA Traders chat room, which is hosted by Anna and myself. That's it for today. Thank you so much for coming along. Sorry we run way over time. If you have any questions, you can drop them to Anna at annacooling.com, or myself, David at quantumtrading.com. We'll be happy to answer them for you there. Enjoy the rest of the trading day. Enjoy the rest of the trading week. Have a great weekend, and we will be back on Tuesday, 7:45 UK time for the Forex session. So we look forward to seeing you there. If not, we will see you back here at the same time next Thursday at 5:15. So stay safe, and we look forward to seeing you again soon. And bye for now.